We are going to get started with a couple of guests. First off, explaining to us a little bit about homeowners insurance. Insurance is one of those things that you gotta have, and people get a little frustrated about it. And really, I'm curious if our guest is going to outline for us, is it always best to just get the cheapest policy? Because we rarely ever collect on it. So should we just get the cheapest policy? Come on. But representing homeowners insurance with Fast Forward Insurance today, which actually he helped nearly 100 homeowners get insurance just last month. So please help me welcome Darnell Ferguson. And let me change that over to you, Darnell, so you can show us what's up. And we're getting there. You may be presenter.
Okay, awesome. Am I presenter, Dave?
You are now.
Awesome. Thank you very much for having me, Dave, and congratulations to all of you who are in the process of buying your first house and going on this wonderful experience with Dave. He's one of the best brokers that I've worked with, and you guys are in great hands. I've done quite a few of these home buying meetings or webinars, so I kind of know what to expect. And like Dave had stated, our office did over 100 escrow transactions last month. Our agency is designed primarily for realtors, loan officer, escrow officers, and of course, home buyers like yourself. FastForward Insurance, we got that name because we like to deliver fast quotes. Not the cheapest quotes, but definitely fast, especially in this time when you guys are going through the process and there's a lot of things flying at you. We like to be proactive and make sure that we're giving you guys the best service and taking that burden off of you, because I know there's a lot of information, a lot of emails, a lot of disclosures going out. And so we just want to make that process fast and simple for you. So once again, the name of our company is FastForward Insurance Services. I will start a little bit about me. I've been licensed as a property and casualty agent since 2012. I did start in the captive market with Farmers Insurance Group. I ran my own office there in Riverside for a number of years. Currently licensed to do just about the whole gambit of insurance: homeowners, auto, life insurance, business liability, workers' comp. I'm even licensed for limited investments with my securities 6 and 63. So that allows me to look at some 401k plans, retirement plans, children's plans as well, if you're looking at saving and sending your child to college one day. So we do everything. Our agency is primed for homeowners insurance, but there are some benefits in bundling your homeowners insurance with other products when you are going through your home buying experience. Okay, so the three different types of agencies, and I just want to kind of let you guys know what you would encounter if you were to shop around for insurance. The first agency is captive, and like I stated, that's where I came from, Farmers Insurance. And what the thing with captive is they only are allowed to sell one product. They have to sell that company's product. So when I was with Farmers, I couldn't sell Allstate, I couldn't sell State Farm. I only had to sell Farmers. So you are limited. They're great companies, but you know, when you're going through your home buying process, you want to be able to shop around multiple different companies, make sure you're getting the right coverage at the right price. So you don't want to just stop at one agency and think that you are going to get the best coverage just with one phone call. The broker side is a little bit different. The thing about the broker side is we don't have direct appointments with the companies. So on the broker side, the broker does represent the consumer only, but the broker does charge a fee for their services, whether that's to find coverage with a different carrier, whether that's to make changes to your policy or endorsement. So the broker side is not the side that you really want to go with. They definitely will include their broker fees into the cost of the insurance, and it's the place that we want to stay away from. So the independent market, that's the market that I chose to go into after I left Farmers. I felt that I had enough experience. I wanted to be able to venture out a little bit more and offer products and services that were going to be tailored specifically to each specific client and not only to what the products that one company offered. So on the independent side, we're licensed with over 100 carriers, and we're able to shop around and do what's in the best interest of the borrower and make sure that they're getting the right coverage at the right price. So when you guys are looking for insurance and shopping around, the best thing to do is to look for an independent agent, someone who can do the work for you, instead of calling 3 or 4 different insurance carriers, giving them the same information, and then shopping that way. On the independent side, I do have this software that is tied to dozens of carriers, so I simply put in the information one time, and the information goes out to the carriers, and the rates are returned back to me within seconds. And then I go ahead and I present that to you and go over any questions that you might have. But at the end of the day, I'm offering multiple options to you guys as borrowers and giving you that luxury to decide which one is best for you. All right, so why I chose to be independent, like I said, we have over 100 appointments with different insurance carriers in the industry. We have direct binding authority, which is very important. Direct binding authority means that I'm able to bind and submit your insurance policy myself. I don't have to go through a third party or an aggregate. And that's very critical when your loan officer is requesting that insurance from the agency. They need that within a matter of an hour, I would say. So they want that very quick. We are a mortgage-based concept agency. We like to save time. Like I said, we shop around and do the work for you. We give you unbiased advice. I'm not a Farmers agent, so I'm not saying, hey, Farmers is the best company, you guys should go with them. I'm saying, here's a dozen companies. Which one would you like to choose from? We like to have customers for life, meaning that every single year we shop around, like I said, and we find the best company that works for you. Possibly the company that we chose for you for this year was the better company to go with. But as your renewal comes up for the next year, we might see that the industry has changed, rates have changed, underwriting has changed, and possibly there might be a different company that suits your needs better for the years moving forward. And then also an entrepreneur mindset. This is the reason why I entered the insurance market is because I wanted the ability to own my own business. And at the captive agency, you do own your business to a degree, but like I said, you are tied to what their specific underwriting requirements are and what their goals are as a company. Whereas on the independent side, I set my own goals, I offer my own products, and I do what's in the best interest of the borrowers and of my agency as well. So let's get into a little bit about the different products, home insurance products that we offer. We offer homes 1 to 4 units. So that could be a single family dwelling, that could be a duplex, that could be a triplex or a fourplex, okay? Townhomes, condos, if you guys are looking at buying a townhome or a condo. Condos are a little bit different. Obviously, we're just going to be insuring the walls in, whereas the HOA would be insuring your walls out. We also insure manufactured homes and mobile homes and renters insurance as well. So if you are in the process of buying a house and you need renters insurance, I can offer that as well. And then when you go to buy your house, we can then move forward and find you a competitive rate on homeowner insurance moving forward. Okay, the risks that we will cover, so occupancies, whether you're going to buy a owner-occupied dwelling, a seasonal dwelling, maybe this is a dwelling you're only going to be attending in the winter time, a rental, if it's a rental property and you're having tenants live in the house, Airbnb, that's a big one now, and a lot of companies, they don't like the in and out traffic that Airbnb offers, and sometimes it can be a little tricky finding companies that will insure properties that will cover for the Airbnb coverage. Secondary locations, and then vacant locations as well. High fire and brush areas, this is a little bit tricky. I know that we just had a big fire off in Beaumont Banning area, kind of right in the back door of where my parents have retired. And so up in the mountains is tricky, and Lake Arrowhead, Running Springs, Questline, areas like that. We can find you a policy there. Homes with multiple claims. This has changed in the last recent years. It used to be that insurance companies would only charge the claims that happened at that specific location. Now the claims are actually moving with the insured as well. So if you filed a claim at an old home and now you're going to buy a new home, that claim would follow you to your new residence. There are underwriting guidelines per company that say we're only going to cover so many claims per 3 years or per 5 years, and even down to the specific claims. Like we won't cover any water claims that have occurred in the last 3 years. So being an independent agent, it gives us the opportunity to go around those underwriting concerns and find a company that will take on specific risks. Homes that are 100 plus years old, that's no problem for us. We've come across homes that have home daycare businesses. That's no problem for us as well. Course of construction, if you guys are buying a new lot, we are able to find insurance for course of construction, and then we will convert that over to a normal homeowner's insurance package. And then multiple loss payees. Sometimes there is a snag on some companies that will only place one or two lenders on a policy. Now, there's some loan programs that require 3 loss payees. That could be a company, let's say a Wells Fargo plus 2 Calhassa lenders as the second and the third. And some companies will say, well, we're not going to cover up to 3 lenders on your policy, and that can deny coverage for your homeowner's insurance. So we do have companies that will cover for up to 3 loss payees on your home policy. Okay, so what does insurance cover? Insurance on an HO3 plan, which is your normal homeowner insurance package, covers on an open peril basis, meaning that it's going to cover you for just about everything that, everything except for what's not covered. I guess you can say that. There's specific exclusions, and we'll get to the exclusions on the next slide. But you'll see that under normal HO3, you're covered for fire, lightning, explosion, smoke, water discharge, snow, wind, hail, weight of ice, vandalism, falling objects, and civil commotion or riot. I know that's kind of a big one in the recent months, just with all the civil commotion going on throughout the country. But there's a coverage for just about everything on here. So these are the perils that you're going to want to make sure that it's covered on your homeowner's insurance plan. And I want to show you what's not going to be covered. So the major perils that aren't going to be covered is earthquake and flood and loss of life, which is life insurance and mortgage protection. And the reason why these are excluded from your HO3 is because they're catastrophic losses, meaning that if one of these perils occurred, it could devastate an insurance company to the point that they wouldn't be able to pay out their claims if they included these coverages as a normal package on their HO3 policy. So these are separate coverages that you can endorse at a later time. You can endorse earthquake, or you can buy a separate earthquake policy through the California Earthquake Authority, which is a state-run program. You can buy a separate flood policy through a private insurance company or through FEMA, which is a federal plan. And you can also buy life insurance or mortgage protection. I find that personally for me, life insurance, mortgage protection insurance is the most important insurance you can have. You're thinking about your family's future. You just bought a big asset. And at the end of the day, unfortunately, if you did not return home, God forbid, you would want to make sure that your survivors had a place to stay and a roof over their head. So those are the three perils that are excluded. Flood policies can be mandatory sometimes. I see that if when you go through your home buying process, your loan officer or your broker will inform you if your home is located in a flood zone. And if it is located in the flood zone, then the lender may require you to carry not only the homeowner's insurance, but also flood policy as well. So we do offer flood as well as the homeowner's insurance. So the basic coverages that you're going to see on a typical homeowner's insurance package when you receive it, and these aren't all the coverages, but these are the ones that you really want to look out for. The dwelling coverage, which is going to be listed as coverage A on your quotation when you receive that from your agent. And the dwelling is pretty self-explanatory. It's the home. It's the reconstruction cost of what it's going to take to rebuild your home. And I wanted to make a distinction between reconstruction costs and market value. The reconstruction cost is what we come up with. We run a system called Value 360. It pulls the specs of the home from county records. We also do some underwriting ourselves through online photos just to make sure that all the specs on the house are accurate. And the system spits back a figure to us that says that this is how much it's going to cost to rebuild your home. That is going to be different than your market value. And so when you receive your quotations from your agent, just make sure that the coverage that they are giving you is what it's going to take to rebuild the home and not what your loan amount is for. For example, if your loan amount is $300,000, but the home is going to cost $350,000 to rebuild, you don't want to only insure your home for $300,000 because that's what the lender requires. The lender says we just want to make sure that our loan, the dwelling is matching our loan amount. Well, if your home were to burn down, well, your lender is going to have the $300,000 to indemnify them for their loan, but you're not going to have enough coverage to actually rebuild the home. Another example to kind of reverse engineer that illustration is you can have a home here in, let's say, Riverside County that's a 1,500 square foot home, and that home might be $300,000 to rebuild or $300,000 on the market. But that same 1,500 square foot home out in Huntington or Newport Beach is going to cost $1.2 million. Now the homes are the same square footage. They're going to cost the same to rebuild, but since the location is closer to coastal land, those properties are higher value, and so the market value is going to be significantly higher than a property that might be out here in the Inland Empire. So I just want to make that distinction clear that you don't want to base your insurance coverage on the market value or on the loan amount. You want to base your insurance on what it's going to cost to rebuild your home, okay? Separate structures coverage, that's coverage B that you're going to see on your quotation. That's other structures on the property that isn't the dwelling itself. That could be a detached garage, that could be a mother-in-law unit, a casita, fences, storage units, barns, etc. So separate structures is usually 10% of the dwelling, meaning if your home had $300,000 of dwelling coverage, we're going to afford you $30,000 of separate structures coverage under coverage B. Okay. Personal property is going to be your coverage C. Personal property, I like to say, if you were to flip your home upside down, what would fall or what is not a permanent fixture to your home would be considered your personal property. Pretty self-explanatory. You definitely want to take an inventory when you move into your home, whether that's an itemization, receipt, taking a video tour, and then keeping that itemization in a secure location, preferably not at the residence, just in case the home does go up in flames. You would prefer to keep that in a storage unit or a safety deposit box or at your at your office. Loss of use coverage is coverage D. Loss of use is important. If you were misplaced out of your house due to one of those covered perils, let's say you had a fire and it was going to take approximately 12 months to rebuild your home, we would afford you additional living expenses for you to live in another location, and also pay for additional living expenses like gas. If you were misplaced out an extra 15, 20 miles, that's more gas that is going to cost to get to your employment every single day. So we would want to put you up in a hotel room, rent out a dwelling in the meantime. Meanwhile, we're in the house, we're rebuilding your house, and making sure that you're not going to be paying for your mortgage payment, as well as paying for a secondary location in the meantime. Personal liability is coverage C. Personal liability is extremely important, with California being a really litigious state. If you were, and this applies for on-premise and off-premise as well. I'll use two examples. If you had somebody over and let's just say they tripped over your son's Tonka toy and slipped and fell and hurt their back, and now they want to seek medical and bodily injury claims against you, personal liability would be the coverage that would help you fight the litigation, or if the insurance company did find you liable and they felt that it was going to be financially sound just to pay the plaintiff off, then they would just pay the plaintiff and pay for his hospital expenses. Another example, if you are skiing up in Big Bear and you're going down the slope and you go ahead and you smack into somebody and you break their leg, and now they want to take legal action against you for their hospital bills, you can also use this coverage off of the premise for incidences like this as well. So typical coverage you'll see for coverage E is $300,000. I wouldn't recommend going under $300,000. If you had other exposures like a trampoline or a pool where you might have young kids coming over and swimming or jumping around, you might want to look at $500,000 as well. So just make sure that you're not receiving quotes for $100,000 or something less. Medical payments is coverage F. I like to call this a don't sue me coverage. So if you had a friend over, in the same example, if your friend were to hurt themselves on your premise, but this friend is a friend and obviously they don't want to take any legal action against you, but they do want to see a doctor or they do want to have x-rays or take out the deductible, then that would be a medical, a little coverage for them to be able to see a doctor and make sure that their injuries are looked at. So these are the basic coverages that you're going to see on your HO3 plan. There are more specific coverages, but I don't want to inundate you with too much information all at once. If you guys did give me a call and got closer to that step of moving or buying a home, then we can get more into the nitty-gritties of some of the other specific coverages. All right, so what is the meaning of my deductible? In insurance, we all know that there's always a deductible, or in most cases, whether that's auto insurance or health insurance. With homeowners insurance, there also is a deductible, and the deductible generally I see is $1,000. In most cases, lenders don't want to see above $2,500 deductible. And in other cases, lenders will allow a 5% deductible, which is 5% of your dwelling. So the deductible is the amount that you would have to pay to initiate a claim. In most cases, you wouldn't have to pay your deductible up front. If you were to file a claim due to one of those covered perils, if you had a fire and it was going to cost $50,000 to fix the damage to the home due to that fire, you wouldn't pay that $1,000 up front. What they would do is upon writing the check for the damages, they would just deduct that deductible from the check. So instead of receiving $50,000 to disperse to your contractors, they would only give you $49,000 to disperse to the contractors. So, so the meaning of the deductible is just to keep people honest, making sure that they're not filing claims for just about anything. but $1,000 deductible is the typical deductible that I see, and a deductible that is more affordable than $2,500. Whenever you file a claim, I do want to suggest that, or hopefully you don't have to file a claim, but if you do, always speak to your agent first. Even if you file a claim and you decide that you want to rescind your claim, companies now are starting to count that against you. So they'll say, well, they filed a claim. I know they took the claim back, but it means that there could be some future problems that could occur. And so we're going to document that and possibly count that against you on your next renewal, and you might see your premium go up. So always talk to your agent. Typically, agents should have a contractor go there, or a remediation company take a look at the damages. And then once they see that this is going to cost a considerable amount of money, then let's get the insurance involved instead of letting the insurance know what's going on immediately, and now they're raising red flags on the possibility of there being future problems at the location. So a couple important things is your loss ratios. We have replacement cost versus ACV, which is actual cash value. On your typical HO3 policy, the home is going to be insured at replacement cost, which means that they're going to indemnify you to where you were before the loss. So if you suffered a loss, we're going to make you whole again. Whereas actual cash value, they're going to factor in depreciation. Most cases, your homeowner's insurance is going to include replacement costs on the dwelling. In some cases, if the roof is over 15 or 20 years old, they will list the roof specifically as ACV, or actual cash value. And then the personal property in your house, you have the ability to choose if you would like your personal belongings to be on a replacement loss ratio or on a actual cash value ratio. You have the ability to choose between replacement or actual cash value. Replacement is going to obviously cost you a little bit more if you decide to go with a replacement loss ratio, where ACV, since we're not going to pay you for the full amount that you paid for your belongings, the policy is going to be a little bit less. So that's definitely an option that you guys can choose from when you get your quotes from your agent. So our mission is to provide faster quotes for our borrowers, faster evidence of insurance for the LOs, making sure that you guys close on time and that there's no holdup or no delays in moving into your house and getting those keys. Less hassle, like I said, happier borrowers, lower premiums, and smoother closing. So I just wanted to finish off with, once again, my name is Darnell Ferguson. If you guys are just joining us now, I'm the president here at FastForward Insurance Services, and we look forward to assisting and answering any questions that you might have. And I just wanted to say congratulations again for those of you who are in the market. It's a great time, low rates to buy a house, and we look forward to hearing from you and providing the right coverage at the right price. So that's all I have for today. I'll release that back to Dave. If there's any questions, I can answer that now, or answer that at a later time, depending on what Dave's thoughts are.
Fantastic. Thank you, Darnell. So I have a couple of questions, and just for full disclosure, you're my insurance agent, and I never understood the difference between independent and broker. I certainly knew of the ones that were working specifically for that major, but that was interesting. And just to outline a few things, you've gotten coverage for me on a manufactured home that is tough to insure because it's a single wide, it's not permanently affixed, it's on corporate land because it's at a private water ski lake, and you got insurance on it, and it was reasonable. So I appreciate that, as well as our tournament promo boat, which is a promotional boat that the dealer of a sort lends to me to take to water ski tournaments. You insure that, and it goes to competitive water ski tournaments, and other people drive it, and you're able to insure that. And that's so you have a wide offering of insurance, and all the pricing that I've ever gotten from you, whether it's a client buying a house or refinancing, pretty much every time you give a quote, they go with it because it's great coverage with solid companies. Berkshire Hathaway just got a policy from them the other day from you. So I appreciate that. So a couple of questions. The mortgage protection cost. I've never really actually looked at the cost of it, but it just dawned on me. Is it affordable? Because like earthquake insurance isn't particularly affordable, but the mortgage insurance cost, is that affordable?
It is affordable. I think the biggest hurdle with mortgage protection, and it's a fancy or a less taboo way of saying life insurance, but it's hard to get people to realize their mortality. So it's just having a conversation, and obviously we don't want to. We hope that life treats us fine and we're in good health, but it is responsibility of a breadwinner or somebody who has independence to take their family's financial future into consideration. So, just to kind of throw out some estimates, if I'm a typical homeowner, let's say I'm anywhere from the ages of 30 to 35, if I'm a new buyer, and I might have, one or two children, by this time, you could probably find a $500,000 policy for, I would say $40, $50 a month. $500,000 could, cover the home, and it can also cover for future expenses, whether that's education, whether that's any debt that has been accrued over time. So I think it's just more about having the conversation, sitting down, and everyone thinks that they're young right now and they're in good health and nothing can happen to me. But I've seen it, and it's been a heartache on me because I speak about life insurance and mortgage protection to every client. And unfortunately, I did have a situation where I did have a wife that did come back to me and said, "Hey, did my husband ever, get that policy? I know you had been talking to him." And I said, "No, ma'am." He said after Christmas, he would get the plan, and it's February now, and unfortunately he passed away, and it was just it was a heartbreak and a tragedy. And a few weeks later, I went out to the whole family, wrote policies for all the kids, for the aunts, everyone. So yeah, it's definitely affordable. It's just having the conversation and getting people to see their financial futures. That's all.
Yeah, if you're the main breadwinner, it just makes sense, particularly if that family is relying on your income. That's tough. That's a tough story. But yeah, no. Okay. Hey, Darnell, thank you. I appreciate the time. And next, we're going to talk about title insurance, another type of insurance that's available that you have to have. And I wonder if you want it. So that's one of the things that's going to be outlined to us today. So representing Stewart Title, Stewart Title is one of the largest title companies, title and escrow, actually. They're in 80 different countries. And who was it? Forbes magazine, I think, said that in the mortgage industry, they're the most trustworthy and worthwhile company in the mortgage industry. Forbes had a few things to say. Fortune magazine had a few things to say. So I don't want to tout about them. Let's bring on the representatives, Julie Putjenter and Eric Willis, to talk about title insurance.
Yeah, thank you for having us.
Thank you very much.
Yeah, and as Darnell was saying, congratulations to all you home buyers, first-time home buyers. It's a great time to get into being a home buyer. It's a very competitive market. A good realtor and loan officer working on your side with a lot of experience to help you, beat out those other offers. It's very important. So it's good to be on here educating yourselves.
Mm-hmm.
Liz. All right, can you see my screen?
We see it.
Fantastic.
Yeah, we see it.
Great. So as David was saying, we're with Stewart Title. Our family has been in the title insurance business for about 35 years. Eric has been in it for about 15 years now, and I'm getting into my 4th year of it. But Stewart Title is a company, as David was saying, it's a national company, very well regarded, on the financial standpoint. But here locally, we are very family-oriented business. We all work very closely together. We have some fantastic teams working with us in our local Marietta office all the way up to Riverside. Just a very close-knit team. We're all dedicated to just giving our clients the service that they deserve. As I mentioned, we have quite a bit of experience under our belts. Our father has been working in this territory down here in Southwest Riverside for over 30 years. So any kind of changes or anything that have gone on over the years, he knows about them, and he's more than willing to share his experiences. As David knows, David and Fred have worked together for several years now. Did you want to share a little bit about your experience?
Yeah, I was going to say, I've been doing this for 15 years. I've been teamed up with my father for 11, and of course, Julie, since she started. Again, this is, family oriented, and it is worked out very well for us. My dad has established a great clientele. Of course, David's one of his longtime clients, known each other through the water ski industry and also in the business. So Julie, of course, she 4 years ago hit us up about joining the team, and we were waiting for her to ask, because we took her in with open arms, and now after 4 years of watching what she can do, we are so happy to have her part of the team, and we're looking forward to just keep growing. And unfortunately, Fred's not here today. We believe he's probably on the slalom course right now, taking a practice ride or something, but we'll figure we'll handle it for him. But just to go on from now, let's talk about a little bit about title. Are we going into what is? And
yeah. So why title insurance? David mentioned, is it something that you'll really need? The short answer is yes. It's while Darnell was talking to all of you about why insurance is necessary for any future instances that might occur, title insurance protects you about any past instances that occurred as it relates to a piece of property. There's two basic kinds of lender's insurance. So we'll go into each of them a little bit more. There's the lender's insurance, and then there's owner's coverage. Did you want to talk about the lender's insurance?
Sure. So the lender's insurance on a refinance, of course, is going to be whatever the loan amount is, and then on a purchase, whatever the buyer's loan amount is what the loan policy will ask for. And what the lender's insurance is doing is pretty much ensuring that they're going to be in first position, and there's no past notes or deeds that are going to be in above their position. So when they sit there and are doing a refi, they know that if they ever sit there and try to utilize that property, then they have to be paid off or handled first before anybody else. Say if there was a judgment, or if the people did a second or a third on their property, well, whoever that first policy is, they're the ones who are going to get handled first. All right. And then an owner's coverage. Good.
Sure. So when you are a seller selling your property, you're going to be responsible to buy an owner's policy for the new owners of the home. And what it protects for them is guaranteeing that they have 100% interest in the house, guaranteeing that they are the new owners of the house. That way, if any kind of hiccups come up later where somebody says, hey, 30 years ago, my uncle owned this and I was the rightful owner after he passed away, that's when title insurance will step in and go through the chain of title to who the rightful owner of this property is.
And also on the homeowners is we make sure that any liens and judgments that were attached to the property from the previous owners is taken care of during the transaction. So that way, when your new buyers are coming in, they don't get calls or mail or anything from creditors from the previous owner saying, hey, you guys bought this property and we attached a lien on this. You need to pay us now. And that's why you get title insurance, because if that happens, you call your title insurance and they will go back and go, you know what, we need to cover this because we missed this and we insured over this.
And that tends to be common with mechanics liens. Mechanics liens are liens from contractors for any work that was done on a property and maybe that contractor wasn't paid in full. So again, another good reason to have homeowners insurance. You don't want any contractors or any other collectors from mechanics liens coming to go after your property. So how it works, we have a fantastic team working with us who are going through copious amounts of paperwork, online documents. They are going through every possible document that was recorded against the property. Everything from easements on the property to we mentioned the deeds of trust, any kinds of liens, anything like that, anything that could be attached to the property. Our search and examining team is going through and putting together our preliminary title report to look at anything that might be outstanding against the property.
To make sure the people have paid their taxes, to make sure that people have paid child support, make sure anything that could be recorded against somebody's name or property, we have to research. So there's something called a general index, and that's when we run the people's name to make sure that it's going to be free and clear for your next purchaser. Or if it's a refi, to make sure that it's free and clear of any bad past history for your lender. All right, and that's pretty much it.
So there's lots of title companies out there, and you work with the one that's going to give you the customer service that you deserve. We are constantly on our phones. We're constantly checking email. We're making in-person visits to offices. We're calling a lot of offices right now due to COVID. A lot of the offices are closed, but Stewart Title truly is known for customer service on every level, from us as sales reps to our customer service units getting out property profiles to our title units who are constantly hopping right on the phone to help clients with any issues that are coming up as it relates to title. As far as the prices goes, it's pretty universal across the board. However, we are always willing to work with our clients to benefit their clients. Whatever the situation is, if it's a refi and a buyer has to come in with $200 and they don't have it, we're willing to do whatever we need to do to help you get the deal closed. And when it comes to competition against other title insurance agencies, we would love an opportunity to at least match or beat their prices.
Yeah, and right now with this industry and how fast it is right now, because you guys are all in this industry, right now, it's hard to find a listing that has been on the market for longer than 5 days. If it is listed right now, it is gone. And what we are trying to inform all of our clients right now is, if you get a listing, open up a listing prelim and let's get it going to see how hard or how difficult this transaction is going to be. And and that way we'll be able to see if there's any liens or judgments or if there's tax issues or anything like that right away. And then also, it's always good to get an SI, which is a statement of identity, and send that in, because if your owner is John Smith, well, we're going to have all sorts of things pop up on the property or on his name. So we always need to get his last four of his social, what addresses he's coming from, and then we run a general index and we get the right information put on the prelim. And that's something that a good title company will sit there and always try to do, because a smaller title company will sit there and just run the name and attach a million items onto your preliminary report. And then it takes you a long time to sit there and go, well, what is really on this property and what isn't? And then we have to sit there and start dissecting on what is actually real. So that's why it's always good to start the transaction early. And then as far as on the refis, of course, it's just plain and simple. We're going to just run it because it's the owners who are in there. But as far as on your listings, let's get them going early so that way the transaction's easier at the end.
Yes. And we also have a lot of valuable resources for agents, because we always say our job is to help agents do their job to the best of their abilities. So we we provide valuable resources such as Stewart Now, Title Toolbox, just giving agents the tools that they need to better serve their clients. But all this really amounts to, us being committed to the common goal, which is closing the transactions as smoothly as possible. And that was kind of title insurance in a nutshell. There's lots of there's plenty of issues that can always arise. My dad has been in it for over 30 years, and he'll still to this day say that he's constantly learning something new.
Absolutely. Yesterday, I learned something new just because right now with a lot of transactions, you're going to run into HERO program. And a lot of people utilize this and they didn't even know that it wasn't as good of a deal as it really was. And it's making us as the title reps, the agents and the lenders jump hurdles to get these things done, because you got to contact the solar company, the UCC company, and you got to request releases or you got to request payoffs. And these owners really don't know what they are, or like what they have to pay to get rid of them. I mean, and it's kind of scary right now with what some of these HERO programs are doing to people. Some people borrow $23,000, get solar, AC units, windows, and then all of a sudden they're going to pay it off and they owe 40 grand. So it's not really a program that's going to benefit them in the long run. At the moment, sure, but in the long run, no. Do you have anything else to go besides that?
No, we are open for any questions that anybody has for us. We can always share examples if anybody's interested.
Yeah, I mean, and another reason why Stewart Title is so good and big, and we see the horror stories all the time as far as transactions where, like, say somebody goes to close a deal and they're saying that there is a deed of trust that was never paid off. So we have to go back and make sure this thing was paid. Some to go back to the last title company who did the policy and look at the final HUD. And if they're not around, then we have to do our due diligence to start calling around to see if it was paid off, or if it wasn't. Then we got an even bigger problem. So that's why we are out here, because we need to sit there and get our hands on these files. Not every file is just clean and easy. I mean, when we say we deal with them every day. So that's why our information's right here. If you guys ever have any questions, you guys email us or call us right away and we'll start working on it.
Awesome. And yeah, I can attest to that, because I have certainly called Fred a time or two, whether it be on a Saturday or Sunday even, and he always gets right back to me if he doesn't answer his phone and answers my questions. And they're usually easy questions for him. But being on the lending and real estate side, I don't know title like you guys do. So even the simple questions that might be tough for me, they're easy for you, and you're happy to answer them. So I always appreciate that. And I had written a couple of notes. Julie, you were talking about reducing fees if need be, kind of a thing. High cost is a real thing. There's limits on loan amounts and how much the buyer or borrower can pay. And Fred has reduced the cost. Of course, he can't eliminate it, but he has reduced the cost in order to try and do his part. And for those, really low loan amount transactions that the closing costs are, even if nobody's really getting paid, there's still expenses to pay, because we ultimately want to close that loan for that buyer or borrower. But so yeah,
Sure.
the office has certainly done that. One final question though, because I know Stewart offers escrow as well. Is it advantageous? Is it advantageous for the homeowner, the lender, the agent, real estate agent, to bundle those and use Stewart for title and escrow?
Absolutely. It's beneficial on a number of levels. First, the escrow officers have fantastic relationships with the title units. So the communication between the two is a lot more streamlined, rather than an independent escrow working with our title units. So that's a huge advantage in and of itself. From a financial standpoint, you also would eliminate the sub-escrow fee. The sub-escrow fee is required when an independent escrow is working with the title company, because wire transfers are being sent from one entity to another. with Stewart Title, we're obviously the same entity, so we would eliminate that sub-escrow fee because, the financials are staying in one entity.
Fantastic. And that's why I
Yep.
use Grace Torres for escrow and Stewart and you guys for title. And I try and keep it consistent. There was a lender that I used a couple of months ago that offered discounted rates and speedy service for their title and escrow.
Mhm.
Oh my God, it was a nightmare. And I don't mind saying it was Quicken Loan Services because it was a nightmare. But go ahead.
You pay for the service that you get.
Yeah, great point. Yeah. Eesh. All right. Well, thank you very much, both of you. Julie, Eric, tell Fred I said hi. I'm sure I'll see him on the water. Really appreciate your input and your time.
Absolutely. Thank you.
Welcome.
Thank you for having us, David.
Thank you. We really appreciate it.
All righty. So finally, let's wrap this up with real estate agency. And Eric and Julie, you can log off if you choose to. It's me talking now, so don't get too bored. But real estate agency. So the side of that aspect that I want to talk about is that your real estate agent, particularly your local real estate agent, because there's options to use an iBuying agency, whether it be Trulia or My Home or Zillow. There's a ton of them out there, and it may look like they offer discounted rates or percentages, but their fees and we can do a webinar on that as well, but their fees range, in my research, from 7.5% all the way to 15%. So honestly, you're going to pay more for that agency or that representation as a buyer or a seller. You're going to pay more for that agent, which 60 to 70% of the money goes out of your town, as opposed to using a local agent where all the money stays in town, whether it's a local broker or a large box agency. The money's going to stay in town. So that obviously is more socially responsible and better representation. When you use a local agent, you're going to get local information, local representation. They know more about the local area. And in reference to that, so generally speaking, it's the seller of the property that's going to pay the agency fees. The average of agency fees is 5%, which the two different representing real estate agents, the listing agent that represents the seller and the buyer's agent, right, that is selling the property to their clients. So there's two different agencies, two different companies generally. They're going to share the commission that the seller is paying. So if it's 5%, then they're sharing, or rather they're each getting 2.5%, if that's the case. And a lot of people talk about, well, they charge 6%. Well, the national average is 5%, but certainly it can be 6%. But if you're going to go with an iBuying agency, it's going to start around 7.5% and go all the way up to 15%. So generally speaking, really bad idea. Certainly for your local economy, extremely bad idea. But it's important to note that your agent, and you really want one, because besides the legal aspects of moving real property, which your agent is licensed and educated on, and does have to take continued education classes in order to keep up to speed and knowledgeable about the different laws and aspects, particularly the PED disclosures and requirements in reference to COVID-19. That's certainly been something within the last 6 months that has been require us to get additional education. But besides the legal aspects, there's the negotiating aspects. So most people know from watching last week that when an inspection, a home inspection is done, that really is an opportunity for the buyer to have ammunition to renegotiate the buying price, the selling price they're going to pay for the property. So you really, really do want someone representing you that can talk apples and apples instead of apples to oranges and feeling like, oh, they don't take it personal. They use knowledge and experience with all these items and have local workers, contractors and handymen, depending on what the problem is, to combat these types of issues. So having agency representation Whether you're a buyer or seller is paramountly important. And you may think, okay, you know what? I think I can sell this house on my own. Eric just commented that houses are selling within 5 days. Well, some are, some aren't. But how much are you going to sell it for? And is the house that you saw down the street really representative that sold, representative of your property? You know, when an appraiser looks at a property, they have to find comps, and you add and subtract values and aspects of a property, make it match the other property to come up with an actual value. So your agent is able to do that through their association in looking up properties that have sold, that are pending sales, that are listed, in order to come up with a responsible value. You could sit in your house for 3, 4, 5, 6, 8 months and not sell it, even during a hot market, if you price it too high. And you might feel, I'm not taking it down. But if you have the actual information and you really priced it correctly so that it did sell within the first 45 days, you probably, and we can do the math, you probably would be money ahead. So an agent that is on your side, they have fiduciary responsibility to you to take care of you, is always a must, in my opinion. And I just want to throw that aspect out.